Hey everybody, welcome to Mortgage Today for Monday, January 22nd, 2024. And oh, what a day it was. UMBS were up 9 basis points bright and early this morning, but that was down 5 basis points from the highs of the first hour. So we were kind of bouncing around all over the place a little bit today. U.S. equity markets are shaking off a rocky start to the year amid conviction that the Federal Reserve will soon cut interest rates and bets that the artificial intelligence boom is set to continue. European bond markets rallied, shrinking the yield spread for Italian and German 10-year notes to the narrowest level since 2022. Oil steadied and Brent holding above $78 a barrel. Meanwhile, the rout in Chinese stocks intensified on Monday as investor pessimism deepened. The Hang Seng China Enterprises Index fell 2.4%, approaching a 2005 low. Chinese commercial lenders held their benchmark lending rates on Monday, disappointing investors hoping for more aggressive stimulus. The week ahead will have a couple of important economic prints: GDP on Thursday and personal income outlays on Friday. The personal income outlay report contains the PCE price index, which is the Fed's favored measure of inflation. There won't be any Fed speak as we are in the quiet period ahead of next week's FOMC meeting. The Fed funds future are now pricing a better than 50% chance that the Fed will cut rates at the current levels and not cut. Better than 50% chance that the Fed will keep rates at current levels and not cut. A month ago, it was an 80% chance of a rate cut. The December 2024 futures still envision 150 basis points worth of cuts in rates in total. However, the December 2024 futures still envision 150 basis points in rate cuts as the most likely scenario. The Conference Board's index of leading economic indicators fell in December, which signals a weaker economy. Going forward. The big drivers of the decline include the inverted yield curve, dour consumer sentiment, and the ISM indices for new orders. The positive indicators include the stock market and initial jobless claims. The week got off to a slow start as far as the bond market is concerned. Volume was the lowest of the year so far, even if only by a small margin. Volatility has also muted at best. The overnight session provided modest gains, and about half of the gains stuck around through the close. Even so, the improvement wasn't remotely enough to change the prevailing landscape in which bonds are in a modest upward trend in search of a short-term ceiling from which to carve out a broader sideways setup for the more important events in the next 3 weeks. UMBS closed the day up 6 basis points at 101.05. So at 101.05, we are just holding into and bouncing into that double ceiling at the 25-day moving average, and that 101.392 Fibonacci line has been a big pivot point for a couple of weeks now. In terms of things you can control is your plans and goals for the year. So check out our sponsor at www.thatmakesense.com. This is from the great book Traction. This is our third post from that book, which is all about unlocking potential, the power of the right people in the right seats. So as we come into 2024, in order to do great things, you need to have the right people in the right seats, and Traction has the plan for doing that. So check it out at thatmakesense.com.